Good morning, guys. Welcome to this Wednesday, June 18th, and we got pretty much in a staying pretty much in that holding pattern we were yesterday, holding on, waiting for development from the Middle East, waiting for the Fed announcement, which is coming out today. So that's going to be a big piece of news coming out, planned piece of news for the day. We had mortgage apps come out this morning. They were kind of a little bit on the downside. At 8:30, we get housing starts and permits and jobless claims. 10:30, we get an oil report. Then at 2 o'clock, we get the Fed announcement, and we get at 2:30, we get the press conference. So I think everything is going to be hinging on that 2 o'clock press conference. That's going to be the piece of news for the day. We'll see how it comes out. Probably be volatile, but not necessarily directional. I doubt Powell is going to drop the rates. It's just we will find out how political that group is. But I mean, it's with everything going on, not necessarily to. It would be a nice thing to do to drop the rates. They did it before the election in a big way. That wasn't a problem, but now it seems to be a big problem. So we will find out. If he does drop the rates, that would, I think, get the market, send the market over the edge and to the upside, I think. So either people are going to be sitting here churning and maybe see some weakness, or we may have a nice little rally if they actually drop the rates. So we'll see. At this point, I'm just going to start off range bound. We are not back up here at the highs again. We are right back in this middle of the range. So middle of the range in stage 3. This whole move out of the middle ran out of gas, and right now we are range bound. So 6,050 is where we are trading right now. I would look to sell strength 6,065s, 80s for rotations back down. The last one would be at the 90s. I would look to buy weakness, the 35s, the 25s, the 15s for rotations back up. The last one would be down at 6,005, so that would be a stretch. I think 6,005 is where we get really down here to the lower end, lower part of the range. So I'm probably going to shift it already by the 6,015s. Start thinking about the shorts, see if they can run it all the way down here to the 85s at that point. That's the way kind of I'm looking at it. So range bound trading, and we have the bigger range, the bigger edges are here at the 85, 90s, and then you're gonna have it's a little bit sloppy up here, but the better edges up here at the 6100s. So 6080s, halfway up there, you start getting close to that upper edge. And I will say that they start trading about this 80 level. I think we have potentially have a short right up here to the 6100s. The last one I would look for short setups against probably is the 6090s. And on the way down, looking to buy weakness at the 35s, the 25s, 15s, probably down here to the 6005s. If they take out the 6005s, probably looking at their move down here to the 5980s, maybe lower. So that's kind of the way I'm thinking of starting off this thing. So they take out this lower edge, the 85s and the 95s. I think at that point we are heading lower. That and the market is probably going to could be rotate quite a bit lower, and the next attractor down is going to be the short term. It's going to be at the 80s is going to be what we take out. Then it's going to be down here at the 5920s. So that's going to be a next attractor on the downside if they take it out on the downside. And if they for some reason take out the 80s, we have a shot at taking out that 6100 edge. And if so, we have up here at the 6130. I think that's your next attractor on the upside. So that's where we start off. Right now, though, I think we are going to start off range bound in a reasonably tight range. So looking to sell strength, 6,065s and the 80s for rotations back down. Last one would be up here at the 90s. Looking to sell, looking to buy weakness at that 35 edge, 25, 15. And I would say the last one would be at the 6,005s. And below that one, we're heading lower. All right, so that's how we get started on the ES this morning. Looking at the NASDAQ and the bonds. So bond market is moving higher, drifting to the upside. They're back up again. Let me see if I can find my capital flow chart here. on there's the bonds. All right, so make this a little bit bigger. So on the bonds, we are uh, off the lows, heading back up to this attractor at day 114.16. I think that's going to be a small attractor from that prior distribution and upper edge and the lower one. So between 114.08 and 114.16, I think we have the attractor point. That's interesting enough that where we took that leg lower from, the 114.16. So looks like we're heading right back to it. So I would start off on the long side on the bonds. Primarily range bound, but biases to the upside. I would look to buy weakness, 1326s, 20s, 16s. Last one would be at the 1308s for rotations back up. And looking for short setups with a little bit of caution. When we get up to that 114.12, 114.16 to 18, I'll be more aggressive on the short side. There could be something holding in between, but I think once you get to this upper edge at the 114.12 to 16, that's where you're gonna have the better resistance areas. So starting off with a slight bias to the upside when it comes to bonds. Let's see how far they can take it. The yield's coming down a little bit. NASDAQ in a pretty good spot. It's kind of holding in a range, super close to the highs. They could not make that the last top here the other day, so they're back in that lower range. So we are range bound, same as the ES. Technically on an F1, the bias is to the upside for both ES and NASDAQ, but I would say we are range bound right now in the midterm. So in the exchange member time frame. So looking to sell strength against the 22,030s, 60s, 120, so 110s and 135 to 40s for rotations back down. I'm going to buy weakness, 940s, 900s down to the 860s for rotations and back up again. So the lower edge at the 700s, that comes out, we are in trouble. And I think at this point, we are right up here above that 970 edge. We are in the spot where they potentially could take it higher again, but I'm just going to say range bound right now and wait for them to start taking out some of these resistance areas. I think if they start taking out that 140s, we are in pretty good shape to run it higher at that point. So that's how we get started. And I think most of it's going to be pretty sloppy going into until we get to the number this afternoon. So probably more of a holding day before we get into that number. So range bound trading is probably the more likely way it's going to turn out. But watch that upper edge at the 2140s, the lower edge here at the 850s. And they trade outside of that range. I think we may have a directional move going, but it's not necessarily the most common thing to see before this close to the announcement. So that's kind of how we get started on the NASDAQ. Range bound, both ES and NASDAQ. Now, in the capital flow perspective, it's leaning long on both of them. But we are in the midterm here, just range bound. Now, finally, oil and gold. And gold is holding right at 3400s. And that is an interesting one. Right here, the track, it looks like we're finding in a spot to build value. They used to be down here on the 3340s. Looks like the 3400 is where they're starting to build value. And as you can see, it's coming to balance right there. So this big move out of the middle we had, and leading up to that Iran-Iraq war the dynamic. And now it's backed off. They retraced it all the way down here. Looks like they're settling in around 3400, 3405. So we're going to be range bound run around this edge. Watch them. If they take out the 14, 15 here, I think they may be starting to trade higher. They start trading below the 3390s. We may see them take this lower. But we see a little volume building here, and I would say the 3415s, and maybe give it up to the 3423s for rotations back down again. Look to buy weakness down to that 3385. That's giving you some range on both sides of this. But that volume edge, as long as they hold about that volume edge, which is pretty close at the 14s, we have a shot at taking this higher. So initially looking for shorts against the 3405s, 3415s, 3422s for rotations back down. About 22, so we're heading higher. And if they and looking to buy weakness, 33.94, sorry, 93, 33.85 or 84.85 here for rotations back up again. And below 85, we're probably heading lower at that point. And if you start heading lower, chances are we can rotate right back here to that 33.40, 45 level. So we'll see. Right now, there's looks like they're finding value around that 34.05. So range bound trading around that one to get started and see how that goes going into the number this afternoon. And then finally, oil. It's the all over the place kind of a market. You have to really be careful trading oil right now, the way things are going. We rolled oil to the August expiration, and that's where we're trading right now. And they backed off a little bit. Not a big jump, but they backed off a little bit. They were trading higher on the July expiration. Now they backed off a little bit lower. So yeah, we'll start off range band. They're back in this range again at the 73, around the 73, 74s. So look for range band trading. They start trading above the 74s. I think we may be heading higher. The trade below 71s, we may be heading lower. So at this point, if we're starting off, and you can see here, when they start taking out that 74 edge, we may see another run up here to that 74, 70s, and a little attractor area from yesterday. But I would say look for short setup, 73.60s up to 74. Look to buy weakness, 72.60s, 72.20s down to the 71.70s and 71.40s. I would say at this point below that area, the 71.40s, start thinking short side of the market. But overall, the range is pretty much 71 to 74 still. The July we start trading higher here, so chances are if the oil were spiking higher on the July expiration, we may see them take out that 74. And if so, I would just stay on the long side on oil, see how far they can take it. But initially starting off range bound, watch that 74 edge. If that comes out, stay on the long side and see how far they can take it. Could still be short setups against 74, 75 and that 75.30 level, but I would just be a little bit less aggressive about them. So that's how we get started on oil. And I mean, I'm not trading oil right now. It's just too volatile and too many cross currents going on out there. You can get a headline come out of nowhere, and suddenly the whole thing crashes right on top of you. So if you're in the middle of a trade or something, you just can get whacked out pretty quick. So I'm going to sit on the sidelines on oil and gold right now until the thing settles a little bit. Unless I see a really good opportunity where it could be worth a shot taking the trade, If you can take the trade and get back in the money so that you have at least a profitable trade, at least you got that thing going for you. Anyway, back to the ES, and so far it's pretty much where we left it. So let's see how this whole thing shakes out. So starting off range bound on the ES and NASDAQ to get started, leaning towards the long side on the bonds, and range bound ES and oil. Both range bound oil and gold, I mean, and both oil and gold are pretty freaking volatile right now, so I would be a little bit cautious about them. Anyway, so we'll leave it there. So good trading, guys. You got a little bit of news at 8:30 to contend with, and thereafter the Fed announcement. So good trading, guys. I'll see you back at 11:30 for the next update. Later.